Hey everybody, welcome back to another episode of Ryan Makes Sense, where we talk about personal finance, investing, and chart analysis. If you are new here, welcome. I do a weekly Robinhood challenge where I essentially put $25 into the stock market and try and beat the S&P 500 while trying to achieve 20% gains year over year, 20% annual appreciation. I am considering doing a monthly dividend portfolio challenge. Thinking about it. But also, today we're talking about summer stocks. Now, we are currently in May. Next is going to be June, pretty close to June. So we're basically in June. By the time this video comes out, it's probably going to be June. So what stocks can we buy now that are going to appreciate over the summer? By the time those summer profits roll around, it'll be fall. It's winter when we get the earnings, the quarterly earnings. So what we're going to do is we're going to look at an online a site that just talks about the best stocks to buy in the summer. We're going to see if those stocks are currently undervalued. Maybe they're in a pattern we can identify, which could lead to a run. And then once that run happens, getting a bigger run once the quarterly profits come out in the fall, which will realize the summer gains. So let's jump right in. All right, guys, we are on this website called Invezz, Invezz. No idea what this site is. I just typed in stocks that go up in the summertime. And this has a preset list that we're just going to go over together. And it says for Q2 2023. Let's go ahead and go through the list. So we have SunRun, Camping World, Pool Corp, Monster Beverage, Winnebago, Home Depot, Visa, Unilever, Nestle, Nike, and Coca-Cola. And then the summer-related stocks that made a loss in the heat. Okay. All right. So we basically got 14 stocks to look through. Let's just go ahead and do this together. I'm going to go ahead and go over to finviz.com, the world's greatest website. And you guys can kind of see my screen. So the first stock that they had was SunRun. And I think it's Run. Yeah. Let's take a look at Run together and see if this is undervalued and maybe we could purchase. All right, you guys can see my screen. My head's out of the way. You can basically see all the important data. So looking at this chart on a daily, it actually looks like it's in a bullish descending wedge where we have resistance up here. It's going down. Support's kind of staying consistent as well. And on the monthly pattern, we have... wow, the high of the stock was at $100. Nothing too crazy. It kind of looks like the stock market psychology chart where we have a little hump here, all-time highs, back down. We have a dead cat, a fake out. It's going to go through here and, oh, sorry guys, right here. So up, we have this fake out, come down here, a little hump, back down. It's going to do a little U-shaped here for a while. That's my guess. Let's see if $16 is cheap or expensive. So they're actually, it looks profitable, barely. So they make or I have to do it longhand actually, 2,420,000,000. And we're going to add the income of 20,800,000. All right. And my head's in the way, I apologize. So we have this here. Now we're going to go down and add cash and debt, and then we're going to divide it by the shares available to see if this is cheap or expensive. And I'm over here. I just want to look at their revenue really quick, actually. So 2021 was 1.6 billion. 2022 was 2.3 billion. That's really good. But look at their margins. They're paying 2 billion to make 2.3 billion. That's kind of sketch. Their gross margin's got to be low. Gross margin's 11%. And all I'm seeing is a bunch of selling here too. Okay, let's look at their cash. I don't see any cash, but I see cash and short-term investments. I guess we'll add that. So let's add 740,510,000, 740,510,000. And let's remove total debt, which I'm guessing is 8 billion. We don't even have 8 billion. Minus 8,427,000,000. Nope. This stock is a hard pass. I would not be surprised to see it get back down to, gosh, $6 to $8. SunRun is a hard pass. Let's now look at Camping World. CWH Camping World. All right, stock is at $25. We're gonna do the same thing here. They pay a dividend. So they make $6,790,000,000, and they have positive income of $95,400,000. So we're at 6.8 billion. Now we're gonna take the cash and the debt. We can see their quick ratio right here is 0.2, meaning they are very over leveraged, but let's see what we've got. Okay. Again, they pay 4.7 billion to make 6.9 billion. Not a bad recipe for success, but that's quite a bit. CEO purchased $1 million worth of stock, but then also sold $10 million worth of stock. So yeah, this one's not looking too hot. So we have 100, we're going to add 130 million, 130,000 here. And total debt is 2.9 billion. So we're going to minus 2,954,930,000. All right, so that brings us down to 4 billion. So total assets is 4.8 billion and total liabilities is 4.6 billion. Based on that alone, I'm scared because who can afford Winnebagos? People who are well off, people who are, I mean, I don't know. People are getting laid off right now. So this one's looking like a no for me, but let's do 4 billion divided by the 38,560,000 shares available, showing $105 stock price. The price to earnings is showing that it's undervalued at $11, but who the heck is buying Winnebagos right now? I think the only thing that's saving them right now is... Okay, did they just pay off a big chunk of debt? No. Their long-term debt went up. Total long-term debt, yeah. Because right here we have total debt at 20.6 and then long-term debt 12.47. So institutions are selling. I'm just going up to the top. I'm going to Fintel and we're going to type in CWH. Institutions own 71% here. Invezz is showing 76. So institutions are selling. We're going to stay away from this one. I don't see this one doing well in a recession or the current environment that we're in right now. So so far the summer stocks are tanks. So we got Pool Corp now. Let's look at Pool Corp. Pool Corporation. Wow, look at this one. Went from $27 to $550. I'm guessing this is a pretty fundamentally sound stock. Probably does dividends, low dividends. Yep, it's in the S&P 500, believe it or not. Looking at the price to earnings, it looks overvalued. In the future, it looks overvalued. Let's find out what the price should be. So they make 5.97 billion in sales. They have income plus 667,300,000. Yep. And let's go look at the cash and the debt. Their margins, they pay 4.2 billion to make 6.1 billion. That's pretty good. Okay. Their balance sheet, Let's move this over here. So they have $45 million of cash. That's kind of scary for how big this company is. 45,590,000. Total debt is 1.386 billion. So minus 1.386 billion. So that puts us at 5 billion cash there. And just looking, total assets 3.5, total liabilities 2.3. Not too bad. This one's actually looking not bad. So, and then we're going to divide this divided by 37,840,000. So a share price of $139. Oof. Right now it's at $338. It's double the price. So this more than double the price. If this gets down to 139, I'm a buyer. It will actually get down to that price because if we look, this is a classic Elliott wave. We have the top being here. So this being 0.3, and now we're going to go A is right here. B, this is a fake out. C coming down here. It should come down further. And then we're going to see another spike like this. This spike to 420, probably spiking down here around 340. After this falls to like 250, 300. So this is the best stock we have so far, but it's way too overvalued. So we're going to pass on this one. Monster Beverage. I think that's MS. Yep, Monster Beverage. I'm going to move my head back out of the way. Look at this bad boy. It must have done a split recently because it's at 59. So if you bought this in 2013, it would be at $6. About a 10 bagger over 10 years, which is cool. All right, it looks like this is in a couple indexes. It looks very overvalued at 42. And I forgot to include the market caps into my calculations. I'm so sorry. Dang it. I'll do it here. So basically, if there's a market cap over 1 billion, we want to add it to our cash and sales, just because that is extra cash from funds invested in the company. So it's kind of acting as liquid cash for the company to use. If the company Monster is like, we're going to take 59 billion from investors to invest it in a new beverage called Little Monster. I don't know. So Monster, they make everything. I was going to say everything's in billions, except for shares float is in millions. So we're going to longhand this. I apologize if it takes extra time. So 6.31 billion plus they make 119 billion. Very profitable. So they make 7.5 billion. Let's add cash and debt. So we're going to add 60 billion, 240 million. And we're going to go down and add cash down here. They have 1.3 billion in cash. Very nice. 130714 billion. And total debt is 0.8. So we're going to minus 800,000. Did a big dent for sure. And now we're going to take this and divide it by the shares float. Divided by 752,840,000. So share price should be around 91. Now let me show you something. So I have the 69.2 billion. And that's from the market cap, sales, income, and cash minus the debt. And I divided by the shares float. So this is our higher price target. And the shares float is the shares that are available to people like you and me to purchase the stock. So if we look at the total shares outstanding, which I believe is reserved for stock options and other contractual obligations within the filings, they have 1.5 billion shares. So if I take that 69 billion number right here, and I divide it by, is my calculator frozen? Divide it by 1 billion 5 million? 1 billion 50 million? Yeah, okay, it didn't let me do that. So let's go back here and let's grab this plus 0. Okay. And now we're going to divide it by the 1,050,000,000. So this is a lower share price of 65. So 65 to 91 is like what we're looking at here. It's at 59. So do with that what you will. If we look at the daily, it's hitting resistance right here. We can see it's been hitting resistance here, here, here. So yeah, this one's actually fairly decently priced. We'll put this one on our list to just watch. MNST. Okay, this is the best one so far. Let's go down to our next stock, Winnebago Industries. I think this again is this is like those campers, I think. Okay, so the stock is at 55.91. Ooh, it's breaking down here. Right here, you can see it. So 55.91, is that cheap? Is that overvalued? Let's find out. The PE shows a 5.9, showing it's undervalued. So this is going to be a really good one to look at. Okay, we have a market cap over 1 billion, so we're actually going to add that to our calculation. So we're going to do 4.46 billion longhand. And we're going to add 312,800,000. That's the income. And then we're going to add the market cap of 1,690,000,000. All right, now let's go down and add the cash and remove the debt. Ooh, they pay 4 billion to make 4.9 billion. Scary. Okay. They have 282,170,000 cash. And we're gonna do removal of debt of 553 million. That's not bad. That is not bad. Total assets 2.4 bill. Total liabilities 1.15 bill. It's actually really, really good price. I'm gonna go back to their income statement real quick. Net income is growing from 281 to 390. That's good. That's honestly really good. And we're going back up here, and we're going to take this and divide it by the shares float. So we're going to divide 28,910,000. So a share price of $49. It's at 55.91. I think this is really close. If we look at the monthly pattern, let's see what's going on here. Ooh, so what we have here, you guys, is a bear flag. So we have this line I'm making is a flag pole. It's like straight and diagonal. And then our flag is, imagine a rectangular thing going like this. So here's the bottom of the rectangle. Here's the top of the rectangle. So we've got our flagpole in that rectangle. The price is gonna come down to probably $40. $44 to $40. So this will be one to watch for after it tanks. WGO 40. I'm just gonna note that down. So again, not right now. This is a no. So let's move on to the next one. Home Depot. HD. All right. This is showing as the 17 price to earnings. Let's do our fun calculations that we do together. Currently, the share price is at 290. So they make 157,400,000,000. That's a lot. They have 17 billion in cash flow. That's amazing. And they have 290 billion, 220 million market cap. All right, now let's go down and add cash or remove debt. So they spend 104 billion to make 157 million. Pretty kind of scary, actually. It's a lot of money. Net income is growing. Good for them. Okay, so their cash is 2.7 billion plus 2,757,000,000. And their debt is 43 billion. Not bad compared to what we have here. So minus 43,193,000,000. That's not much. Total liabilities 74.8 billion. Total assets 76.4 billion. Ooh, that's so close for comfort, you guys. That's so close for comfort. They do a 2.8% dividend. All right, so we have this, and we're going to divide it by the 1 billion 100 million shares outstanding. So that's a share price of $420, and it's at $290 right now. That's a pretty good price, if you ask me. Do institutions think this is fair price? Do they agree with me? Let's find out. I think this is a really good price. Institutional owns 71.7%. And mind you, Finviz is a little bit outdated. So Fintel, the site that I'm flipping over to in a second, has the most recent filings. So Home Depot has a 71.7% ownership as of old data. Given this data that we just looked at, showing that the stock price should be around 420, are institutions buying or selling? Hell yeah, they agree with me. They agree with me. Institutions own 80.8%, up 9% from the up 9 percentage points. So Finviz had them at 71.7. This is at 80.8. This is amazing. So this just goes to show my calculations have some type of merit. So Home Depot is actually our #1 stock right now. I think we could buy Home Depot now, sell it in the winter, yeah, look pretty good. I'm actually going to consider buying this one for my challenge. All right, next one is Visa. Visa V. Gosh, that's like almost so 420 and 290 is current price. All right. Visa, ooh, hanging man right here. This is a hanging man. It's not the end of the month. This is on the monthly chart though. We still got a few weeks. So let's see what this should be trading at. So we're going to take the sales, income, and market cap. So 30, everything is in billions, so I don't have to do it longhand. So 30.98 plus 15.48 plus 461.49. All right, so they have 507 billion, and we're going to add cash, remove debt. Oh my God, they spend 5.7 billion to make 29 billion. That's amazing. Okay, so they have cash of 15.689 billion, and they have total debt of 22 billion minus 22.450 billion. This is looking really good. Okay, so their assets is 85.5 billion, total liabilities 49 billion. Oh, this is beautiful. This is beautiful. So we have 501 billion divided by 1.61 billion. So a share price of $311. It's at 231, but again, let's look at the shares outstanding as well. So Visa has high equals 311. And if we take that 501.89, this is the sales plus income and market cap plus cash minus debt. And we're now going to divide it by the total shares outstanding of 2.06. 243 is the low. So between 243 and 341, stock price is 231. So I'd actually say this is a little bit undervalued, fairly. Institutions own 98.9%. Based on Finviz, let's look at the new data, the most recent updated data. Ooh, institutions at 85.6%. That's down big. So institutions are selling. I think we will see some better prices on Visa. So let's wait on Visa. Let's look at I'm thinking around 192. All right, so we're gonna remove Visa from the equation. Let's look at Unilever. Unilever. I don't know what makes this one a summer stock, by the way. What does it say? There's no real information. Okay, so the stock price is at 54.21. Everything's in billions, so this will be pretty easy. Let's go ahead and do it. Price to earnings is at 16, so it's about fair value based on Invezz standards. So we're going to do 66.15 billion plus 8.41 billion plus 136.37 billion. Jesus. Okay. 210, and let's add cash, remove debt. And they pay a pretty chunky dividend. So they have 1.7 cash billion, so 1,773,000,000. Dang it, why did I type it long ways? 210.93 plus 1.773 billion. Removing debt, they have 28 billion in debt, so minus 28,439,000,000. Shoot, 28.439. Okay, so that leaves us with 184 billion, and we're going to divide this by 2.52. So the fair share price is around 73. This is at 54 right now. So I dig this stock right here. I dig it. Given the dividend that it pays, this is actually beautiful. UL, fair price equals 73. Current equals 54.21. So there's some value to be gained, and let's see if institutions are buying or selling. So Unilever, it's showing that institutions own 10.9%. I think they own more than that based off of what we just did, and that dividend is really attractive. So we have shares of, they own 324 million. Let's write this down. 324,185,046. So we're gonna do this the long way. So they own 324,185,046 divided by 252 billion. Times 100. Okay, so 12%. So Invezz is showing 10.9. We have 12%. This is a good one. Unilever and Home Depot are looking really good right now. Next up is Nestle. I don't think that's a yeah. Nestle is an over-the-counter stock, and we're gonna stay away from over-the-counter stocks just because we're being consistent. So sorry, Nestle. I'm guessing you're probably a good company. Nike. All right. Nike. How is Nike doing? Ooh, look at this. They're falling. They fell out of their range. Okay. All right. Everything is in the billions, so this will be nice and smooth. So they do 50.63. Dang it. Whoops. 50.63 billion in sales plus 5.48 billion in income plus 180 billion 0.50 million. Let's add cash, remove debt. Quite a bit of selling here. Cash, they have 8.5 billion, 8.574 billion, and debt they have 9.43 billion, 9.430. All right, and the total assets 40.3 billion, total liabilities 25 billion. Not bad. All right, and we're going to divide this by 1.22 billion. So Nike's high price is 193. Current share price is 120, so this is looking good. And let's take the 235.74. This is, again, our sales, income, market cap, plus cash minus debt. And we're going to divide it by the total shares outstanding just to get the lower stock price as well. So between 153 and 193, the stock is currently at 120. So there's some value to be had there. Are institutions buying or selling? Institutions own 82%. That's old. Let's see what the new data shows. 74%. So institutions are actually selling this. So Nike could be coming back down to fill the gap. Nope, the gap was... No, it hasn't been filled. Around $100. So that'd be about a 20% shave. So $100 for Nike, that would be worth revisiting. For now, it's not looking good. Next up is Coca-Cola. I don't know why this one is a summer one. Maybe for refreshments, advertisements. Ooh, look at this beautiful pattern. This is an ascending triangle. You can see resistance, resistance, support over here, support over here. All right, Coca-Cola, 2.87% dividend. Let's see what we've got. Everything's in billions, thank the Lord. So 43 billion, 49 in sales, plus 9.87 income, plus 275 billion in market cap. Let's add cash, remove debt. So they pay 18 billion and make 43 billion. That's beautiful. Okay. So they have 9.5 billion in cash, 9.519. And debt, they have 39 billion, 149 million. All right. And total assets, 92.7. Total liabilities, 68. Good, good, good. And if we take this 299 divided by 4.3, that gives us a share price of $69. It's at 64. KO. I mean, it's good. Don't get me wrong, it's good. $69 and it's currently 64. So there's some value. You know, let's see if institutions, what they're doing. Currently, institutions own 71.5. I mean, this is pretty solid, so I'm guessing it's probably around that 71, 75, 69. The stock seems to be just like a staple to have. So it's at 75%. So it's up about 4%. So yeah, I mean, you can't go wrong owning this one, I think, if you're thinking years and decades, honestly. Beautiful. So I like KO. It's not as attractive as Home Depot and Unilever. All right, now let's look at these ones. Six Flags. Let's see what this one's doing. It's at $26. All right, let's go through our calcs here. Put the calculator here. So they make I have to do everything longhand. 1,360,000,000. But they lose. No, they make 108 million. 108.90. And they also have 2 billion market cap, so 2,190,000,000. All right, and let's add cash, remove debt. Wow, they actually pay 108 million to make 1.3 billion. That's really good. Look at all these buys. Did we find something, you guys? Did we find something? Okay, balance sheet. They have plus 80 million, so 80,120,000. Yep. Total debt is only 2 billion. Okay, well, let's see. Minus 2,382,000,000. It's 44 actually. 2,382,044,000. Okay, so that brings us to 1.35 billion, and let's go back up here. Divide this by 81,980,000 shares available. That's a share price of $16. It's $26. I thought we found a diamond in the rough, but not too hot. Institutions own 99% of the stock, though. That's pretty crazy. So let's just see SIX. I'm guessing it's probably over 100% now. Yeah, 107.74. That's quite a bit higher than the 99. So they have really good margins. Their debt is kind of killing them, but I don't know. I think this is a decent stock, but it's a little overpriced. The current price to earnings value is showing that it's a little overpriced, and the forward price to earnings showing that it's undervalued. So if we could get this at $16, 9 to 16. I'm just going to note that down. 9 to 16. All right, we're going to pass on it for now, though. Avis budget. I think that's car rentals. Yep, Avis budget here. Car rentals have been hot. All right. Everything's in, it's not. Okay. So let's do 12 billion, 120 million, plus they make 2.55 billion. That's nice. And they have a market cap of 6 billion, 120 million. Good for them. Let's add cash, remove debt. Okay. All right. So they have 570 million cash. So plus 570 million. How much debt do they have? Probably a lot. Total, that's 18.4 million. So minus 18,480 million. Woo. That's a lot. And the total shares outstanding divided by 38,670,000. Share price of $74. It is currently trading at $154. This is deathly overvalued. We're going to pass. I'd want to come down to the 200 SMA, which is around $50. So that'd be cool. So Avis car budget is a bust. Carnival Corporation. I'm excited about this. I think cruise lines are going to come back hard. Carnival, is it under $10 still? Oh, it is. Okay. This one will be interesting. All right. This will be fun. Okay. Everything's in billions. Yep. Okay. So we can see they lose 4.895 billion here, but it's showing as millions because that's a Invezz thing. So just a heads up. So they make 14.98 billion a year. Whoops, 14.98. And they lose 4.895 billion. And they have a market cap of plus 11.5 billion. Let's add cash, remove debt. Cash, they have 4 billion. Nice. So plus 4 billion 029. And total debt is probably going to be ugly. 34 billion. Yeah, minus 34 billion. 0.546. Yeah. That's a negative. That's a negative for me, Bob. Yeah, this is ugly. This is ugly. In terms of paying off their debt, they're paying off their debt. So their debt went from 5.7 to 5.3. So this will look attractive around 6, 7. I mean, what are institutions doing? Because, I mean, you could be adding at these levels slowly over time. So when they do pay off that debt, you're at a really good average. Because, I mean, if this company has no debt, let's just do this. This company has no debt. We're going to do, again, 14.98 minus 4.895 plus 11.5. Again, no debt, no cash. And we divide this divided by 1.03. That's the shares outstanding. It's $20 stock. So you can see the share price double. Institutions own 46%. That is down from 50%. So people are just waiting on the sidelines for this one. This will be a pass. So we just went through all of the summer stocks based off of this website. A lot of duds. The best ones we saw were Home Depot, which was currently trading at 290, and it has a fairish price of 420. Institutions are buying it quite a bit, and also Unilever. Unilever is trading at 73, or I'm sorry, the Unilever value based off our calculations is 73, and the current value is 54, and institutions are adding that one. Those are two stocks I'm going to be putting on my watch list for my Robinhood challenge. So yeah, if you guys made it this far, I appreciate you for taking the time. I hope you learned something. Hope you found a good stock to add to your watch list. Consider subscribing. It really helps me out. Also, hitting the like button goes a long way. So if you guys hope you're having a good day or night, and I'll talk to you soon.